Tax advisors versus accounting firms. Which one is better for international tax planning? Navigating international taxes can be a maze, and most business owners get this wrong by assuming any financial professional can handle cross-border tax planning. The surprising truth is that tax advisors and accounting firms serve very different purposes, and choosing the right one can save you time, money, and potential penalties. Tax advisors are specialists focused exclusively on tax strategy. They help individuals and businesses optimize tax liabilities, take advantage of international treaties, and plan for long-term growth. For example, if your company operates in multiple countries, a tax advisor can design a structure to minimize double taxation and ensure compliance with local laws. Their expertise goes beyond just filing returns. They provide proactive strategies for mergers, acquisitions, and international investments. Accounting firms, on the other hand, handle broader financial management, including bookkeeping, payroll, and standard tax filings. Larger accounting firms may have international divisions, but their focus often leans more toward compliance than strategy. While they can prepare financial statements and ensure filings are accurate, they may not offer the nuanced planning a multinational business requires. So which is better for international tax planning? It depends on your needs. If your business is expanding globally or dealing with complex international transactions, a tax advisor provides specialized guidance to minimize liabilities and optimize operations. If your goal is maintaining accurate records, filing taxes correctly, and ensuring local compliance, an accounting firm can handle those essentials efficiently. The key takeaway is that the most successful companies often use both. Accounting firms maintain the financial infrastructure, while tax advisors develop strategic plans to reduce exposure and leverage global opportunities. Understanding this distinction ensures your business stays compliant, cost-efficient, and strategically positioned for international growth. Choosing the right partner can turn complicated tax laws into a competitive advantage.